Hello, this is Barney with Russell Real Estate, and today I wanted to talk about mortgage interest rates, where they are, where they're heading, and what that means to buyers and sellers in the real estate world. So for those of you who have not been paying attention to interest rates recently, they've actually increased pretty dramatically over the past 3 to 6 months. And in fact, since January, they've increased by over 1.5 points. So we were seeing basically low 3% interest rates on 30-year fixed rate loans, and now we're hovering closer to 5%. And what that means to buyers is that you are losing purchasing power when buying a home. So what does that mean? Basically, every 1% that the interest rate increases, you're losing about 10% of the purchasing power for the overall purchase price. So to use a real world example, because that still might not be clear, I actually ran some numbers for a Medina property that sold for $300,000 back in the summer of 2021. And in the summer of 2021, it was not uncommon to see 30-year fixed rate loans at 2.75%. So with this example, I'm just taking a couple of assumptions and putting them into our calculator. So $300,000 purchase price, a 2.75% 30-year fixed rate loan, and a 20% down payment. That gets you to about a $1,400 a month mortgage payment. So that's your monthly payment right there. And that is actually what buyers are pre-approved on, is their monthly mortgage payment. So how much can you afford per month? It's not actually going to be pre-approved up to a certain purchase price, because the purchase price is only one variable as far as what your monthly payment's going to be. It's also going to include your interest rate and then property taxes too. Insurance, if there's going to be flood insurance, different things like that. So that's one misconception that I do want to at least put out there. But anyways, back to the example. If you want to keep a $1,400 a month mortgage payment and your interest rate went up from 2.75% to 3.75%, you're actually going to have to decrease your purchase price to $275,000 in order to keep that same monthly mortgage payment. When you're looking at a 4.75% interest rate, which is closer to where we are right now, you would have to decrease that purchase price to about $250,000. So you could see, just over the course of 9 months there, you would have to decrease the home that you're looking for to a maximum purchase price closer to $250,000 in order to keep the same payment as what you had last year for a $300,000 house. So a $50,000 price decrease in the type of home that you're looking at. And unfortunately for buyers, the home sale price has not slowed down yet. So I take that back. It's slowed down a little bit, but it is still increasing. So you, as the buyer, are unfortunately getting footed with the bill of a rising interest rate and still rising home prices. That will eventually have to slow down, but the reason why I think it's still a good time for buyers to buy is because of where interest rates are supposed to be heading, as well as where home prices are supposed to be heading. So many experts are predicting that the 5% interest rate is here to stay for the considerable future. And it's actually supposed to go up by the end of the year. And by next year, some experts are predicting a 6% interest rate. So even though you may be kicking yourself for missing out on buying a home last year when interest rates were really low, don't make that same mistake. That mistake is in the past. Don't make that same mistake by not buying now, because interest rates are supposed to go up again in the future. So when interest rates go up, home affordability goes down, all things being equal. But the other major factor for home affordability is going to be your home price. And people often think, well, when interest rates are going up, home prices should be going down. And in theory, that's correct because homes become less affordable, and basically to match that same mortgage payment, something's got to give. But there's still so little supply, so little inventory on the market for houses that are available, and so much demand for all of these buyers who are looking to move, that house prices, while they may not have that same 15% year over year appreciation that like we've seen the past 2 years, they're still going to increase. Whether that's a healthier number like a 5%, or even if it's a 10% or whatnot, the home prices are still likely to increase, and you could see that prediction throughout the industry, no matter where you look. So home prices are supposed to still go up, interest rates are supposed to go up. That's why I think now is still a good time for buyers to buy. As far as sellers, I also think that if you're considering selling, now would be a good time to sell too. It still is a very hot seller's market in many parts of Northeast Ohio, and I always want to be first in, when it comes to, or first out in this case. So it's a hot market, but we are going to eventually have to see a shift in the market because, again, home prices can't continue to accelerate in value the way that we've seen them. It's just not sustainable. So basically, as interest rates are increasing and houses are becoming less affordable for buyers, you're going to have fewer and fewer buyers that are pre-approved and looking at your home. So say you wanted to list your home for $300,000 because a comparable home 6 months ago sold for $300,000. Well, again, that's comparing apples to apples for houses, but it's not comparing apples to apples for your mortgage, your monthly mortgage payment, because we looked at the numbers, and I encourage anybody to double check those numbers in your area. But you're looking at a different monthly mortgage payment for a $300,000 house now compared to 6 to 9 months ago. So you're also looking at different types of buyers or fewer buyers. So it's just going to take a little bit of time. It's going to take an adjustment, but I'd rather be early to sell still before the market really starts to slow down, especially if you do have overhead costs and whatnot. It's like, hey, you might as well unload the property, try to maximize as much as you can for it now by pricing it aggressively. And when I say aggressively, I mean, don't try to overprice it, because we are starting to see more days on market, meaning it's taking certain properties longer to sell than it was last year. We're also seeing fewer homes in crazy multiples, meaning, last year I was seeing a lot of houses that had 10 plus offers on them. Now it seems like it's cooled down a little bit to maybe, 3 offers on a home. That may be due to us just coming out of winter. And who knows, maybe it heats back up here as we get into the warmer months. But do you want to take that quote unquote risk to list your house late as the market is starting to turn? Again, I'm not predicting a big downturn. I'm not actually predicting that houses lose value at all. I'm still saying, in my opinion, I think houses are going to go up in value, but are they going to go up as rapidly? And is that something that you are positive of, that if you need to sell and you're thinking of selling, why take that risk? So that's kind of what my opinion is on the market. Of course, it's just an opinion, but if you want to talk about real estate, I love talking about it. Feel free, shoot me a message, text me, call me, and I'd be more than happy to talk. Have a great day. Thanks.